I'm joined today by a venture investor, a product person, and an insurer. So hopefully we're going to get three quite different takes on what AI is doing within Fintech and Insuretech specifically. I'm Tracy Doree. I'm a partner at Augmentum, which is a Fintech fund. And I'm just going to ask each of the panelists to very briefly introduce themselves.
Hello, everyone. My name is Gbite Oduneye, and I'm the managing partner of ODBA. We're an early-stage venture capital firm with a focus in fintech, edtech, and health tech. Really happy to be here.
Hi, everyone. I'm Tom Spraggs. I'm a director at BMS Group. We're a top 20 insurance broker. My background being the financial lines division, working with regulated businesses as well as commercial businesses as well.
Hi, I'm Javier Bello, product builder. I've been working mainly fintech in banking and payments, with also in e-com. I've been building products, working in engineering, and also in marketing and growth.
Amazing. And AI, of course, will continue to change the future. But I wanted to start in the present moment and just ask each of you for one thing that you're seeing that's really impacting the industry that you're in today. Do you want to go first?
Well, it's precision at scale, right? To be able to do, to offer the service that a private banker will be able to offer you, but to be able to do that to millions or hundreds of thousands of people. So that fundamentally changes what a company is able to do. Completely changes the game completely. I've said completely a number of times, and if given the opportunity, I'll say it again, because precision at scale really does enable a company to add so many products, so many layers to the services which they can offer the companies. So a fintech automatically becomes an insurer, becomes a health tech, becomes so many things.
Yeah, I mean, what underpins the insurance industry is obviously the ability to do the appropriate amount of risk assessment to offer premiums, offer the right premium associated with that risk. And as a result of that, there's a lot of disparate sources of information that are typically gathered, reviewed, analysed. So I think where AI is coming into it a lot more in recent years is digitizing that information, collecting it all together, and actually extracting the relevant pieces for underwriters to use. And the turnaround time as a result of that is extremely improved and quicker, and what that leads to is a better end user experience as well. So everyone here will be doing consumer-based products in respect of their life insurance, their house insurance, and all of that is becoming increasingly automated, and the risk modelling behind it is also becoming increasingly improved with the use of things like large language models for huge documentation that would usually take days to work through.
I like to talk about the MasterCard and Visa, right? What they are doing right now, right? They are implementing agentic AI. MasterCard has Agent Pay. Visa is building or launching intelligence commerce platform. And what they want to do is go beyond what we can do right now with things like ChatGPT, right? So now you can go to ChatGPT, you can ask for holidays, vacations on Maldives. They can give you some recommendations, some hotels, some places to go, but they cannot, ChatGPT cannot purchase, right? So what Visa and MasterCard are doing is, okay, we have your data, we know your data, we know your what you like, what you don't like. So we can help you to understand what are you looking for, but also we can transact, right? So that's what they are building with agents in AI, and I think it's a very interesting battle, right? Google also is competing with Buy4You, and of course, OpenAI is also competing in that battle.
And I guess you're giving us an example of precision at scale there, and then you're also giving us an example of the ability to compete and win with MasterCard with your huge proprietary data set. And I wonder if, Javier, maybe you can just talk to us around some of the real practical issues that are perhaps barriers at the speed of adopting the potential that AI can give us.
Yeah, sure. So everyone is talking about AI, right? We all know that if we don't talk about AI, we are strange, right? So there are challenges, right, that we need to face, right, when we build AI. One of the main challenges is data, right? We need data. We need a quality data. We need a reliable sources, right? there is another problem, which is the bias, right? So if we don't train well, we don't follow up, we don't audit those machine learning algorithms, we can get decisions that have a bias, right? We need also to look at this. There are solutions for this, right? And AI is giving the solution. There is now synthetic data, which is generative AI, right? That can generate the data for your trainings, for your learning, right? I think another big problem is regulations, right? There is no regulations yet, right? So in the US there is something, Europe is working on it as well, and the UK, but it's constantly changing AI, right? So it's very difficult to set up a framework that give us that regulation that we need, right? So my recommendation is always design with privacy in mind and also compliance, right? We have been working in compliance, right? We know what we need to do in compliance. We know what we need to do in privacy with GDPR and other regulations, right? So if we stick to those regulations, we won't be that bad when the framework came into the picture, right? So I think probably those are the two main. There are more, but I think we don't have time.
Yes, and we just spoke about a large fintech that's actually saying part of their strategy for where they locate their teams is slightly dependent upon availability of consistent quality chips. So I guess we see lots of different barriers maybe to the potential for adoption. And Bette, can you just tell us a little bit of how the evolution in AI has changed either your thesis for investing or how you build conviction and make decisions to back individual companies?
Well, we're still in the process, but it's changing it massively. So now our defensibility lens has changed completely. Now we look at it, when we're looking at a company, we look at it, how does this company change with each new transaction or with each new client? How are they using the data of their new customers, right? So how we look at companies now, it's compared to how we looked at companies before, we're expecting these new fintech companies to be able to use their data, to harness their data, to be able to create a number of new products. And we want the founder of the companies we're looking at thinking that way, because AI gives you the ability, the potential to do that. Also, we're looking at companies in their infrastructure, their general infrastructure, when they built the way they built their general infrastructure. We want it to be AI-driven, meaning like very similar to what I said earlier on. Now that you have access to a number of other verticals and you can do this at speed with AI, we expect as a fintech company to be able to offer a number of other services very quickly. Insurance, for example, to be able to do things much better and faster than they could do it before. So it's important that a fintech can also offer insurance, can offer entertainment services, can pretty much offer a number of other things that they couldn't offer before. And this is not something which we were looking at previously. So it has completely changed our thesis. To a certain point, I'll be very honest about this. We're taking a bit of time now before we make investments in fintechs recently, because there's been a number of changes, a number of things that these companies can now do. So we're looking at a fintech company thinking like a super app, if that makes any sense, right? Because that's what AI gives the ability and the power to do. So a fintech company, we don't tell them what to do, but obviously that would help our conviction if they come across like a super app, because we believe strongly that's what AI is going to finally enable financial services companies to become super apps. And whoever does that best is the one that would win the day. So it has changed things.
And when you're meeting a business and you're thinking about their ability to create a defensible position, to create long-term sustainable value within that company, how do you think about that now when a company can iterate their product and expand so quickly with new technologies?
Well, so at the first, we want them to be able to do it. The honest truth is, I'll be lying here if, what does that mean in the future? Does that take them away from focus? Do they become, too thin and not deep enough in the products that they do offer? I think we would all get to that point very soon, I suppose, over the next 18 months. But initially, you want to ensure that you're backing a company that has the ability to branch out to all these different sectors. I think, you know, in 18 months, we might have this conversation, and I might say that it was a terrible mistake, and maybe we should have just concentrated on companies that want to double down on something in particular. But again, it's difficult to think of it that way because of the power of AI, right? What is this person ineffective if that AI can make more effective? Another thing which is important that we think about is it's not AI for the sake of AI, because you know, that's a misalignment of some sorts, and it's just noise, right? And when it's not done properly, it's just noise. But when it is done properly, it's the new infrastructure for the fintech company, and this enables it to become, like I said, this super app. So in all honesty, I think we're going to wait and see, but we would bet on that they would be able to, if they're just going thin and not deep enough, I think AI would enable them go deep. But that's how we're looking at it for now.
Just one more follow-up question there. As incumbents are trying to figure out how AI is going to change their business, and they've got inertia, they've got lots of people that have been doing particular activities for a period of time, and the blockers that Javier was talking about earlier, you know, no more so true than an established large-scale business. And what we're seeing, I suppose, is those companies more regularly and more quickly partnering with startups. Does that mean then that if you get to 1 million of ARR, actually you might not have found product market fit? At 10 million ARR, maybe you haven't found product market fit because perhaps your clients are buying not just your product, but 3 of your competitors too. How are you starting to think about product market fit in this new version of the world?
Well, I mean, that's very well said. That's a brilliant question. So maybe we do need to think of product market fit better, right? In a different way, because, or maybe the company has hit product market fit by being able to offer all these services of all these other companies, right? That might be the new super app thing, that they hit product market fit. The company has $6-7 million customers, or a large customer base, and is able, their technology is flexible enough for them to make as many partnerships efficiently, which is important, right? So you don't spoil the you know, the user experience, right? The infrastructure is solid enough for them to be able to create all these partnerships. But that might be the new way. But then again, I believe there will always be a customer that wants a certain sort of relationship with the company. But again, AI offers that. So you know, I'm afraid, I think it's that super app. I think building that platform that enables you to interact with a number of services that you can offer might be the new product market fit.
Yeah, and maybe that comes back to the mindset of the founders. Javier.
So no, one comment, you were spot on, right? But I believe the market fit still is the same, right? It's being with your customer, being with a customer, understanding the pain points, what are the problems, right? I think here the question is time to market, right? Time to market now is not anymore 1 year, right? Is you can be doing something, and at the same time a competitor is done it, is launched, and is already in the market, right? And that's something we need to bear in mind, right? So getting data to be able to compete and be quick, right? I think it's important.
Tom, can we switch a bit and talk around your industry and the competitors within your space? What have you seen change already today, or what do you know that's already in process that will impact either operations or customer experience, or perhaps some other element of the business?
I mean, yeah, to give some context, I think there are elements of the insurance industry which are relatively archaic. So, I mean, 15 years ago, when I started, the way claims handling was done is there is a company called Exchanging, which Lloyd's would use, and essentially you would file your claim with Exchanging, and they would take a shopping trolley round and dish out individual claims files to staff to handle and process on a day-to-day basis. That is how it was done. So if you fast forward to today, that claims element is becoming increasingly efficient. And while I wouldn't say there's huge uptake for the reasons we've discussed in terms of blockers, human reluctance largely, and large firms not having the sort of capability to introduce it, that claims side is really essential from an insurance perspective. And ultimately, as a purchaser of an insurance product, the main thing you're going to remember is whether or not your claim was paid and how long did that take. So the claims side, where you're looking at things like the processing of data, the settlement element, and additionally and importantly, the fraud detection element. insurers are increasingly like incorporating all these elements into an end-to-end sort of transformation process. And I mean, for my sector personally, I would say the average claim time from first notice of loss to payment is probably still around 3 to 4 months. Whereas if you look at more commercial areas where they are, like Aviva, where they are utilizing these AI and they're very vocal about using the AI, it's probably a matter of days. And that again goes down to the data that goes into it and the ability for a client to now interact properly with an insurer who doesn't necessarily have the time. So, I mean, we've all seen chatbots come a lot more into insurance products now. The ability for people to interact with the insurer, as it were, with the natural language processing being used, that makes a huge difference. So I think insurance is becoming a lot more efficient from that perspective. I mean, there's always going to be a question with insurance. We were discussing earlier around the use of agentic AI, because the clue being in the title, a broker is essentially becoming relatively obsolete through the use of it. So there's got to be a balance there. And I think the general consensus is you do need some human involvement. But if, like we spoke about before, the insurance process is going down from days to minutes, and there still has that human oversight, then that benefits everyone. In terms of where I see it going, maybe going forward, there's a huge amount of, well, there continues to be a huge amount of data points that are being collected, you know, with watches like tracking your fitness, health apps, elements like that. Vitality would be using, you know, actively encouraging people to monitor fitness accordingly, elements like that. So I think the data points are going to continue going on the up. There was an article by McKinsey that said we'd have 1 trillion connected devices by 2025. So presumably that's exponentially increased now. So I think being able to utilize that data accordingly, like Javier said, and having it to hand is only going to make things quicker. And a lot of insurers are probably leaning towards now just the immediate policy provision. So if you want an insurance policy, a life insurance policy, anything like that, a commercial policy, that is now quite instantaneous. So I think what we're probably seeing is almost a removal of that human interaction, which you'd expect from AI. But with that comes really improved frequency of service provision. And ultimately, the most positive thing is an improved settlement in respect of payment. The knock-on effect of that from an actual insurer perspective, because I appreciate I'm talking a lot about sort of client experience, is as an underwriter, if I've gone from 3 days down to 12 minutes per risk, then the volume at which I'm working is significantly increased. So my gross written premium goes up, the company capital goes up, and in that way, more investment can potentially then be made into other areas of the business, such as, you know, we've talked about third-party firms that do have that specialty in AI. I would also say that from a turnaround time perspective on the client side, general customer satisfaction going through the roof is going to improve that insurer reputation and branding to no end. But at the moment, just to give you an outline of the insurance market, the reason I have an air of cynicism about it is because there's so much M&A activity in insurance at the moment. My old firm bought 60 firms in 2021. So how you go about then implementing all of this, you know, brilliant technology and all of these systems into a company that has such disparate regional offices, and also people that have just been doing things their own way for the past 30 years, and you're now telling them otherwise. That's a challenge which a lot of the C-suites are going to have to make a decision on.
A bit of human inertia around operations and risk profile, but the potential for massive books and very satisfied customers on the horizon. We hope.
Yeah, I think what people need to also adapt to, if they are, is doing more complex risks. So where if you are finding yourself replaced by a computer, then maybe you need to start looking at doing things like parametric insurance, where you know, AI can help you with things like flood risk, but you know, on more complex projects, because you know, things like climate change and all the cat modeling associated with that are an ever-moving piece. So there's definitely still risk assessment out there, and there's still human involvement needed, but maybe it just needs to be a bit more detailed and granular, rather than holistic and high risk, which is what a lot of the consumer stuff is at the moment.
Yes, thank you. Can can I just ask a question to the audience? Are there many founders in the room? You can pop your hand up. Okay, cool. I guess the next question is really with you in mind, and I'm really interested in everybody's view here of what are the opportunities that people can be thinking about with your view, your vantage point of what AI is doing to the industry, and actually what are the unforeseen challenges that may be a blind spot for some of the people that are building in the room that you'd like to encourage them to take a look at. Javier, do you want to take that first?
Yeah, sure. So opportunities is huge, right? I think there was one revolution, internet, back in the 90s. Another revolution, I will say, was smartphones. And I think this is a totally new revolution, right? So internet gave us the option to access to a lot of data. AI is giving us the option to process that data in minutes, right? So I think there are a lot of opportunities, and we need to take them, right? We need to use them wisely, and solve another problem, right? Which is trust and transparency. I think that's another thing that we should solve with AI, right? How to educate users to rely and trust in AI, and how can we make sure that AI is not like a black box. I add an input and I get an output, right? That's why we have explainable AI that is helping on this and is giving traceability, right?
Thank you, Tom.
I won't give anyone advice how to run their business, but what I would say is from an insurance perspective, several years ago we had what was referred to as a silent cyber issue, where traditional policies, professional indemnity, directors and officers liability, things that companies would typically take out, there was Lloyd's looked at them as highly risky because they weren't confirming or denying whether they were covering cyber liability. So if you had a cyber attack, could that be picked up under your professional indemnity? Because it's not saying either way. I think we've got to a stage now with AI where a lot of insurers are considering it in the same vein, whereas policies aren't confirming or denying whether they're covering it or not. So my advice from an insurance perspective is to ask the question and also partner with an insurer that is being affirmative with the cover for any AI mechanisms that you are utilizing. There are several insurers that are very keen on it and happy to insert language accordingly. But if you don't get an appropriate policy and you're simply looking at a cover for service as opposed to tech service, as opposed to AI service, then you'll probably find yourself having a long, hard conversation with a loss adjuster in a worst case scenario.
So trust and transparency from Javier, and trust and transparency maybe from Tom. Bitter.
Ambition and audacity is what we're looking for, right? Because you've now come across a form of technology that enables you to do pretty much anything. Depending on how you use it, it could misalign you and you become nothing to nobody, or it could really empower the business. So you want to start looking at the business not just from an automation point of view or just initial customer interaction point of view, which is great, it makes it cheaper and better. But you've got to think of the business now as an organism that constantly is changing. It's constantly studying your customers, constantly using the data of what your customers do to stay on top of things, right? Because if you don't do that, another company will right now. And right now, defending whatever is unique to you is really important, because it's not very difficult to take whatever moat you think you have away from you. So I think it is continuously evolving, and that's how you've got to think. I know we all think about that anyway when we're building our businesses, but now you've got to use AI to think, always be thinking steps ahead. What can I do? What extra services can I provide to my customers? And that's best done with you really, I know we've said this, and we've always said this, this is what a number of founders say, but it's really using that data now. Because before it was really expensive to really study, judge, and come up with, painting those archetypes of what your customers are like. But now with AI, you can. And it's not just that you can, you must continuously have a clear point on your customers, what it is they do, what sort of things can you introduce, how do you serve them best with AI. So we've all become data analytic companies in this new world, and at pace, right? I don't think it's something we should fear. I think it's something we should embrace. I think it's going to, yes, I suppose a number of us would lose jobs, but I think, sorry, I just had to say that, right? But I think it's going to empower innovators to do what they do even better, faster, and hopefully cheaper for their customers. So it's a really exciting time. And she's waving the red flag. Okay.
That's a wonderfully positive note to end on. And so I think I will call it time there. Thank you, everybody, for sitting and listening. And thank you so much to the panelists. I really enjoyed the different views. I think it was a really helpful collection of people here. Thank you.
Thank you. Thanks, everyone.